Hi class, today we're going to be looking at the comprehensive software problem for chapter 4. You should be able to see ProConnect now, and what we want to do is we want to make sure that we pick up the tax return where we left off in chapter 3. So I'm going to click on the menu Tax Returns and make sure that you're in 2019 and that you pick up the client that you were preparing the return for, which was Albert Gator. We also want to make sure that we have the instructions pulled up. So you should be able to see the cumulative software instructions. And the following information is available for Albert and Allison Gator family. The Gators own a beach house in Hawaii. The beach house was rented for the full year during 2019 and was not used by the Gators during the year. The Gators were active participants in the management of the rental house, but the activity is not eligible for QBI. QBI stands for Qualified Business Income. And you might want to read about that in your chapter to see exactly what that is and why they wouldn't be eligible for that. But they're telling you here that they're not eligible for the QBI deduction. Pertinent information about the rental house is as follows. This is the address. This is the rental income. These are the expenses that would go against that income. So the main thing you need to do is you need to know where to put that in the ProConnect software. So I'm going to click back over to my ProConnect software problem, and I'm going to look at the menu item right here. And what we're going to be having to do is we're going to be recording information about some more income. Since this is going to be a rental type of income, you'll want to record this in the rental income place, which if you'll scroll down, you can see it right here. There's a rental and royalty income. We're going to be looking at rental income for this particular problem. So I'm going to click on that. And then what's going to come up is the type of rental property that it's going to be. And in this case, we just read that it was going to be a beach house that they're renting. And so I just typed that in this first blank here. Also, they want a description of the property, which is beach rental house. And they want the street address, and that was given in the problem. So I just typed in the street address as well as the city, and the rental house is in Hawaii. This is the zip code for the rental house. And so you're entering basic information about your rental in this section. And so you go on and read some more for this. The type of property is going to be a single family residence that we're renting. It's not a vacation property, so make sure you put a 1 right there. And so they'll give you a list to click down to choose from, and this is a single family residence. You also want to write down the number of days that it's rented, and the number of days that it was rented, they told you in the problem that they had rented it for a full year. So 365 days is the yearly amount of days that were rented. Also, they want you to tell what this information relied upon is both husband and wife, they own it jointly. And then it says, if required to file Form 1099, did you or will you file all required forms 1099? Well, we didn't have to do any 1099 forms, so I just chose 2 here. Also, they told us information about management in this property, and they said they were actively involved. I didn't really see a place where you could record that, so none of the rest of this is relative to or relates to the problem that we're looking at. So that's about all that I would put down for property information. But you do need to know what type of property it is to be able to describe it, and the address is basically what you need in this section here. This is going to go on Schedule E of your income tax forms. And so in order to finish up Schedule E, then what we need to do is click up here where it says income statement. We're going to do an income statement for this rental type of business. And in the problem, they gave us that the gross rental income was $20,000. So in the line where it says income, rents, since we're renting this, we rented it for $20,000, you just key that in there. And then you take off all the expenses that they gave you. So the first one that was mentioned in the software was cleaning expense, and that was $2,400. We're just copying it straight into the form on ProConnect. So $2,400 goes here. The mortgage interest would be recorded here. And again, that's given to you. Your mortgage interest is right here, $7,900. And that's what I've recorded here as interest for the mortgage. And then the next thing that ProConnect says is the repairs. So again, I'm taking that straight off of the instructions. The repairs were $675. And then the real estate taxes, see, this is taxes, and there were real estate taxes that we paid on this rental, or that your client paid on this rental. And the amount of those taxes were $2,175. So you're basically just putting information into this income statement type of form. The last thing that we need to record is our utilities. So utilities was $1,500. We record that right there. They didn't teach us how to calculate the depreciation yet. That's going to come in a later chapter. So we might have to go back and add to this at some point in time. But right now, that's all the information that they gave you. And so that's all you really need to record as other income for a rental. So all you did basically is you put in the income amount, and then your expenses are going to be deducted from that. And the difference between the income or the revenue and the expenses will give you the net income from this rental that it will calculate for you on your tax return. And so that's all you had to put in for the rental income. So going back to our problem, we've entered in all the information for this. And again, here they told you there was no depreciation for this house. And then it says Albert and Allison received the following combined statements. One of them is a 1099 dividend, and the other one is a 1099B from their investment manager. And so this is a tax document that they would have received off of the investments that they've made for the year. And notice here on this first one, this is the Peach Fund, and they have given you a capital gain distribution. So in other words, what that means is at some point in time, Albert and Allison got paid $450 off of the investment that they had for the Peach Fund. And it's a mutual fund. And so they've earned some money off of that, and they've sent them some money. And this is where the person that was handling the mutual fund for them, the Peach Fund for them, would send this document stating that they had paid Allison and Albert $450 during the year as a distribution. Notice this is a capital gain distribution, so we need to have a place to put that. So we're going to go back to our tax return, and I'm going to scroll up for just a minute here. And under income, again, this is going to be a distribution of income, and it's found on this form 1099 interest, I believe. So let me click on that just to make sure. No, it's not there. That was from the last problem. Okay, let's click on the dividend income. That's where it's located. And technically, class, the only way I knew this is because it had this capital gain distributions column on it for $450. I just recorded that it was from the Peach Fund, and I put that it came to Albert, Mr. Gator, and he received $450. I just keyed that in. So again, that's under the dividend income where you have a capital gain distribution. And I really just had to hunt around for it because I didn't know that right away. But the key is these were 1099 forms. And I think you can see here that there's got a 1099 dividend form. That should have told me that's where that was. So that's how you know to put it in the dividend income. So this is a capital gain distribution. In the next part of this 1099 dividend, they've changed it to 1099B, which are proceeds from a broker and barter exchange transactions. So these clients own some stock. There were 100 shares of Orange County stock, 100 shares of Banana Company stock, 100 shares of Grape Company stock. They also had some bonds that they had purchased as an investment. All of these are types of investments. They have also have a mutual fund, which we talked about. We just received a capital gain distribution off of this Peach Fund here. But all of these are types of investments. And so the date of acquisition and the date that is sold tells you whether or not you're going to be receiving a long-term gain or loss or a short-term gain or loss. If it's longer than a year that they've held the stock or the bonds, then it's going to be a long-term loss. If it's a year or shorter, then it's going to be a short-term loss. So for Orange Company shares, it's important that you realize the date of acquisition. And there's a place where you can record that on this 1099B. So let me go back for just a minute to ProConnect, and let's look to see where we can find 1099B. And right here, it says something about miscellaneous income. Let me click on that for just a second. No, I don't see anything that relates to that. So what we need to look for is Schedule D. That's where we're going to record our transactions for the sale of our investments, our stock investments. So look down through here till you see something about Schedule D right here. Business, oh, no, that's Schedule C. Dispositions. This is going to record the sale of your investments, or Schedule D. It's got some other things associated with it too. So I want to record this in Schedule D. So I clicked on that to expand this menu to where it says Schedule D. I'm going to click on Schedule D. And you can see here, I've recorded each one of those investments, starting with, because they had this first, the orange company first. You want to record the date acquired and the date sold, and the proceeds is the cash amount that you sold it for. So when you sold these shares of stock, you got $3,000 in cash. This is what it cost them. The difference between what it cost them and the proceeds is the gain or the loss. So basically what you're going to start out by doing is putting down the number of shares of the company stock, what company stock it was, the date that it was acquired, the date that sold, the amount of the cash, the selling price that you got, and what it cost you. So that's what I did here. There were 100 shares of orange stock. This was the date it was acquired. This is the date it sold. This was the selling price. This was the cost basis. Now, something that you need to know is, since this was acquired in 2001 and it was sold in 2019, they held this for over a year. So this is a type of long-term investment. So do you see out here where it's got details? Click on the details portion of this. This is where they're going to ask you about the details of the stock. The quantity of the stock was 100. It was orange stock. This was the date it was acquired. This was the date it was sold. This was the selling price. This was the cost. And it was joint, but something very important that you don't need to leave out is whether it was a long-term investment or a short-term investment. Long-term investment is what this is. So I chose 2 and I put it in this blank. If you leave that off, it will mess up your Schedule D. So you got to tell it whether it's a long-term investment or short-term investment, because on Schedule D, there's certain parts. In Part 1 is for short-term gains and losses. Part 2 is for your long-term gains and losses. So Part 2 is what we're clicking on here, because this would be a long-term gain or loss because they've held this stock for over a year. They've held it for longer than a year. So make sure you fill in the information about whether it's long-term or short-term, because if you don't, it will mess up your statement. So don't do that. I'm going to caution you on that. Once you're through entering the information, I would return back to the previous form. And the way you get to that is right up here in blue where it says back to quick entry. You want to go back to it because you got to enter these items, the rest of the information for the stocks that you sold. And the next one, you sold 100 shares again, but it's of the banana company stock. This was the date acquired. This was the date sold. This was the amount of cash they received. This is what it cost them. Again, pay attention to your dates. Since this is 2005 that you bought it in, you sold it in 2019. It's another long-term investment. So I'm going to go back to ProConnect, you would enter in the number of shares. I put the stock that we owned here, the date acquired, the date sold, the sales price that was given, and the cost. And be sure you click on details. And on details where this expands out, and make sure you select 2 down here. If you don't, then it will make your form wrong. So we don't want you to do that. Again, to get back out of here, you got to go back to where it says in blue, back to quick entry. The next one is the grape stock. And the grape stock was acquired on 12/18/2018. And then it was sold on 9/25/2019. That's less than a year. So this is a short-term type of stock. So enter in the information about the sales price and the cost. This is a short-term item. So we're going to click on the details for the grape stock. And notice down here, we had to choose 1 because it's a short-term type of investment. It was a year or less. And once you get all that information entered in, you just go back and then you enter the rest of the information. Again, this information was given in your problem. So the next one was the bond information. It comes from right here. This is the date acquired. This is the date sold. This is the cash amount you received. This is what it cost you. Again, this one is a long-term type of investment. So in the additional information, we'd have to choose a 2 there. And then finally, we got the mutual fund here. And that was purchased in 2010, was sold in 2019. Again, this is a long-term type of investment. So once you've recorded all the information here, then you want to make sure that you choose in the details that you choose that this is number 2, the long-term investment, just like we did just a minute ago. And so that's how you record your sale of your stocks. Then in the rest of this problem, it says on January 12, 2019, Albert and Allison sold their personal residence for $715,200, and they purchased a new house for $725,000. This was their personal residence before and after the divorce. Remember, they got divorced and then they got remarried again. They have lived in it 3 years since remarrying. The old house cost $120,000 back in January 2007. That's when they bought it. Then they added on a new bedroom and a bathroom a few years ago for a cost of $20,000. That's the capital improvement. So that's going to be added back to the cost to get the total cost basis, or the basis of the personal residence. They also built a pool for a cost of $60,000, and the pool also becomes a part of the cost of this house. So $120,000 was the purchase price, but they added a new bedroom, an addition to the home where they spent $20,000 on it. So that's included in the basis of the asset. And they also put a pool in, and they included that too. So $120,000 plus $20,000 plus $60,000 is technically the cost basis that they have in this particular residence. Now, also, you need to know some information about real estate. And if you sell real estate, and if you're married filing jointly, you can take a $500,000 deduction off of your gains, so you won't have to pay capital gains tax on $500,000. But unfortunately, because the cost of this, because the cost of their home was $120,000, plus the $20,000 addition, plus the $60,000 pool, the total cost was $200,000. And if you subtract $200,000 from $715,200, it leaves you with a gain of $515,200. But $500,000 of that is not included in capital gains. So only $15,200 would be included. So the main thing about this is you have to find a place to put that information. So I'm going to go right back to where we were before on Schedule D, because we sold our personal residence, we disposed of it. And it was a personal residence, so I put that as a description of the property. This was the date we acquired it. This is the date that we sold it. So technically it's a long-term type of investment. The selling price was this, and notice this was $200,000. And if you click on the box beside of this, when you're doing yours, it'll show up as a plus. And when you click on that, it'll have a place where you can add all the things that you added to the house together, so you can get the total basis for the house. So 200,000 was the amount that you had invested in the house. And I put a 2 up here because it wasn't on 1099B. They just told us about it. And so I didn't know what else to do with that. So I just stuck a 2 in there. It didn't affect anything, I don't think. But something that you got to put down or got to remember is that 500,000 is deductible from the capital gain. And so I really wasn't sure where to put that. So I just tried it here because I didn't see any place else to put it. And that's because I'm not real familiar with ProConnect, like y'all might not be. But this is where I chose to put it as an expense of the sale. It's not technically an expense of the sale, but if you leave this off, it's going to calculate the long-term capital gain at $515,200, and you're not taxed on all of that. So this 500, according to your instructions in your textbook, is given if you're married filing jointly. You don't have to pay $500,000 in capital gains tax when you sell your personal residence. But if you're single, it's a different amount. I think it's $250,000 that you can apply to it. But in this case, since they're married filing jointly, it was $500,000, and this is where I chose to put it. Also, you got to click on the details just like you did with the stock, because you want to put down that that was a long-term type of investment. Otherwise, it will mess up your Schedule D form. And that's all you do for that. In fact, that's technically the entire part of this problem. So we've actually finished the problem. So what I would suggest that you do is click on check your return, let it make the calculations for you. And you can look at these amounts here to see what you had to record. And now some of this was recorded previously, remember, because this is a cumulative problem from chapter 1, 2, and 3. Now we're into chapter 4, so it's just adding to what's already there. And finally, click on File Return, create a PDF, save it, and then upload it to Blackboard. And that's all I want to talk to you about today. I'll see you soon. Bye-bye.